It wasn't a bad week in the end. The All Ordinaries rose 2.3% for the week, having traded steady today. But it was a shocker of a month, down 7% after falling 5% in August. Today's session was flat because modest falls by the miners and the banks were offset by things like AMP and Woodside. Commodity prices fell 11% in September, but there was a bit of a recovery today across the board. Foods, precious metals, energy and base metals all did okay. But it's interesting to look at the long-term picture. This is the broad commodity price index. Now, that run-up from late 2007 was the band playing after the Titanic hit the iceberg. Investment banks and hedge funds were just looking for something else to play with. Eventually it sank, of course, then bobbed up again and is now back to the range in which it traded for 2 or 3 years, leading up to that silliness in 2007-8. The Greek share market went backwards last night, but that was about the only one in the world. Obviously, there's only one thing worse than not being bailed out by the Germans, and that's being bailed out by them. House price data came out today from RP Data and Rismark. The national median price was down another 0.4% in August, making it 2.3% for the year so far. Broad picture, Australian house prices are rolling over slowly and gently. No crash yet, but certainly no recovery. And in some markets like Melbourne, Brisbane and Perth, the decline seems to be quickening a bit. Sydney prices are holding up pretty well. As for the Aussie dollar today, it's down just a bit. I'll be back on Sunday with Inside Business and the chairman of Connect East, Tony Shepherd, as well as Citi's head of commodities research, Daniel Hines. Till then, go Cats.